So you just heard about this thing called the stock market, right? This beautiful place filled with investors, speculators, and people of all ages attempting to turn a dollar into two. This place seems confusing and scary. Most don't even want to dive into the world because they feel they don't have the proper college background to be in the space. However, the stock market requires no degree, no special knowledge. And in this video, I'll show you 5 things that have turned me into a successful investor, and it wasn't my degree in management. This game is for everyone, and if you wish to learn it, I've got you covered. Now, before we get started, be sure to hit that like button and subscribe. It's your favorite investor, and this is the channel to help keep you invested and build your wealth. Now, this could be a video like all the others on YouTube where I explain how to open a brokerage and buy a stock and set up automatic withdrawals and all of that, but there's a million videos out there like that. And instead, I believe this video is better suited to share with you guys some of the things that I've learned throughout my time investing that have helped me accumulate my first 100,000. It wasn't easy because obviously you had to sacrifice the immediate gratification of spending money in order to make it happen. But I think my future self will thank me for this. One of the concepts that have allowed me to stay invested was understanding that the stock market historically goes up. However, it does have periods of no growth or negative growth. We've heard it in the news. These periods where the market draws down, say 30%, or a period of time where the market isn't making new highs and it's just kind of trading within a range, not really going anywhere. These moments can happen at any time based on various economic factors. However, no matter what stage of wealth building, you got to understand that these moments provide the opportunity to extract maximum gain from the markets. Yeah, it'll hurt to see your portfolio down, but understand that dividend payments and any extra income you throw into the portfolio at that time will nearly double on the next bull run or market breakout. These moments are gifts. The stock market is literally on sale. Stock market corrections for the most part are scary, for most at least, but you got to stay invested. You don't want to get caught selling the bottom right before the rip. A crash is inevitable, and how you respond should always be the same. You've got to see it as an opportunity. Another thing I learned over time was don't listen to the news. Matter of fact, stay away from it. Stay away from the hot stock of the year or month, or it doesn't matter. It's not worth chasing. For most of us, the S&P 500 will be enough. You will see exceptional growth and low volatility by simply investing in this one asset. See, what happens when you chase a hot stock is you put yourself in a position where the risk to reward profile is not in your favor. And so your investment will probably not work out. I'm not telling you to not invest in a company you have high conviction in. And what I mean by this is before everyone loved Tesla and before the electric car hype, I was a buyer of Tesla. I felt like Tesla was going to be that next company to really, innovate cars and innovate the way we travel and move. And yeah, that made me a small bag, but I didn't want to invest in Tesla because of the media. Matter of fact, I started investing in Tesla before everyone had really talked about it, before the car hype, before everybody was, going crazy over electric cars and all of this mania was going on. Once that started happening, I had already taken my gains. And I didn't do this because of some news article or some analyst. I did it because the narrative of the company had already changed in my eyes from when I originally invested. I didn't wait for the news to tell me that the stock is now down 20%. So what I'm saying is you can find your own stocks or companies, but you don't need to bet the farm. You can take a small percentage of your portfolio and invest that. Because if the stock really does take off and compound, it'll make you quite a bit of money. And this brings me to my next point. You want to keep things simple. If you invest in the S&P 500, you don't need another 50 stocks in your portfolio. You are already investing in 500 of the biggest companies in the United States. So my Tesla example was one of the companies that I wanted to have an extra investment in, to have it more concentrated on that one company. But you don't have to have 50 of these. I do this with Amazon, Apple, Enphase, and Ford. But like I said, I don't keep 50 different stocks. I've got the S&P 500, SCHD, and a couple other small stocks that I think, or small positions in stocks that I think will compound. Should one fail or not perform very well, it's not a big deal because it was a small portion of the overall investment. But if it really runs and compounds, the outcome will be very noticeable. So keep that in mind when constructing your portfolio. Keep things simple, and don't put all of your assets into one company. Like, it might seem outlandish to say, oh, just a small portion in this one company is not going to make a difference, but you got to understand that when those stocks really start to fly, it can be something literally life changing. And you don't want to you don't want to have a super high concentration in these high flying stocks, because then the portfolio is going to be extremely volatile. And if so, it's going to make it a lot harder for you to stay invested, because you won't have any stability in your portfolio. And managing 50 positions is just tough to do. So one trick that I also recommend is to keep things automatic. Right? Once I figured out the companies that I wanted to invest in, I got the S&P 500 index fund that I wanted to invest in, and I figured out, okay, this is where I want to allocate my funds. Now you just have to make it automatic. Make your deposits into that account automatic, and if you can, automatically invest it into those places as well. Operate like the money doesn't exist. I did that, and my portfolio responded really well, and has been like growing on a consistent basis, whether the market is up or down, because I'm consistently inputting cash. On days where the market runs up, it's looking crazy, and on days when it is down, I'm still buying more. So this led my account to growing no matter what, because I'm consistently adding cash, even if I'm not consistently doing it myself, because it's automated. So definitely automating those investments. That is one of the number one wealth building tools that we have at our disposals. Automate that cash to go into your account and act like if you never had that money. And of course, last but not least, time. Time is your friend. The first 5 years, you probably won't see much in terms of growth. I mean, you might, but you might not. It just kind of depends on what you're invested in. But after the first 10 years, you'll look back and be shocked. After years 20 and 30, the efforts from those first 10 years will have literally 4 to 5x, probably even more. And time is your friend because of compound interest. So when you invest, you have to understand how compounding works, because this alone is where your growth will come from. But the only way to achieve this is through time and patience. And I speak from experience. I'm now approaching my first decade investing, and a lot of the growth has happened now towards this last year. Next year is going to be even crazier, and the next year after that. And when I look forward 10 years after that, I'm not even going to recognize my account anymore, because it reaches a point where the dividend payments make a huge difference, and a 1% gain on the day is a huge swing. But it takes time for the account to grow and compound, and you're going to know once it actually like takes off, and you'll start to see those changes in those portfolio, and you'll start to catch an even bigger bug to invest more and continue to grow in the account more, because you know and understand what you're invested in and how what you're invested in is going to continue to multiply your account. But anyways, man, I hope you guys found this video helpful and got some value from it. Be sure to check out thebestdividendcalculator.com. And as always, man, thank you for watching. Be sure to hit that like button and subscribe for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.